So we've got a full room, and we've got a bunch of people online. And for technical reasons, I think for the people online, we're going to keep them on mute, but I think they can start submitting questions right away, and we'll come around to their questions as we go through the 2 hours that we have together. So there's quite a bit of time. And also, I think the people in the room who are not speaking are also going to have a chance to ask questions, but we're going to try and save that until we're through, because I think we have 4 fantastic panelists who each have a deep set of expertise and experience on this particular topic that they're actually going to share with us today. So first, maybe just quickly myself, my name's Greg Chen, and I work at CGAP. And I'm going to try mostly to stay out of the way. But maybe I'll just go down and quickly introduce the panel, and I'll just introduce them in the order that they're going to speak as well. So Ivo Jenik is a financial sector specialist at CGAP and a lawyer by training and a former supervisor from the Czech Republic, right?
Well, rather on the regulatory side.
Rather on the regulatory side. Sorry, I'm gotta keep my columns straight. So Ivo will be talking about a paper that he just wrote together with Kate Lauer called Regulatory Sandboxes and Financial Inclusion. So that's only come out in the last couple of days, and was partly that sort of early exploration of the topic for us was part of the reason we really wanted to actually have this event. So the next person to speak will be Catherine Wines, who's the Executive Director and co-founder of World Remit UK, and she's an accountant by training and long experience, but I think in this particular, World Remit of course works in many, many countries, but she's actually a participant in a sandbox. Or not she, but World Remit is a participant in it. And so we're going to hear actually specifically about how a company experiences a sandbox. And after that, Sean Duff is a senior fellow at the Aspen Institute and long history in technology, the lawyer by training, but has been looking at sandboxes, I believe, quite widely, but is actually going to speak very specifically about advising one central bank on how to structure a sandbox, and that's Sierra Leone. So not your normal run-of-the-mill country, or this is quite a. So it's great to have that kind of. I mean, we have Malaysia, which is I think quite a bit more of an advanced financial system and regulator, and we have Sierra Leone. So I think there's some good comparisons and contrasts. And then we have Dia Markova, who's the head of programs at Innovate Finance. She was just explaining she used to be on the consulting business before joining Innovate Finance, providing regulatory strategy to her clients. That was with Deloitte, right? And you joined Innovate Finance
about 2.5 years ago.
About 2.5 years ago. So Innovate Finance is a club for FinTech. And is that the right word? It's a membership association. Sorry.
Probably
the better word. Yeah. So CGAP is a club for donors. So that's what we like to say. Okay. So we take it in the most positive way. Hey guys. So we started, but
just made it sound like we party with FinTech for a living.
Well, sandboxes is such a new and exciting topic. It always sounds like it's a party happening. So. But Dia will actually talk on about a slightly different take on things, which is how industry is creating sandboxes that allow FinTech to play, which might or might not have a very strong regulatory angle to it. But it's really to create the space that FinTechs can use to play in the financial system. So that's broadly the order, and we'll save questions until we get through it all. So I'm going to stop there and turn it over to Ivo, who's going to draw on his very recent paper that he did together with Kate Lauer, and we'll go from there. So over to you, Ivo.
Okay, thank you very much, Greg, for a great introduction, and thanks for the great panelists joining us in this event, and also welcome all of you to CGAP. In the following 30 minutes, I would like to talk not only about regulatory sandboxes, but also about the broader context within which regulatory sandboxes emerged as one specific approach towards innovation that regulators have been adopting. So I will talk about this broader context, and then I will specifically focus on financial on regulatory sandboxes and then how they play out in the financial inclusion context. So let me contextualize this presentation with the initial backdrop against which I will then explain the concept of regulatory sandboxes. So today, financial regulators and supervisors, be it central banks, be it sectoral supervisory agencies or single financial sector agencies, face a number of challenges, many of which are stemming from the fact that the environment in which they operate is changing very dynamically. And so these challenges include several issues such as expanding mandate, changing legal and regulatory framework, increasing number and diversity of financial service providers, obviously technology and innovation that is evolving very fast, and also threats that all these new innovations bring along. Not to mention that many regulators and supervisors also face internal issues in terms of coordination and cooperation. So with so many things going on, regulators need to adapt quickly. However, their ability to adapt is obviously proportionate to their flexibility, which is constrained by many issues, be it degree of discretion that is allowed to regulators by legal and regulatory framework, be it available resources in terms of staff, time, but also money, or be it incentives to take on risks that may be constrained, again, by the legal and regulatory framework, but also by political support, for instance. In addition, not only regulators need to adapt, but also regulation needs to adapt. Because the rules of the game for the financial sector were framed when the game was played by a handful of players on a desk board, whereas now the game is played by multiple players in a multiplayer mode, and it's played online heavily. So there is a need to change the framework as well. And you can argue that many of these things have been happening in the past as well. So you can say technology, innovation, expanding mandate, new threats. These are things that existed 20, 30, 40, 50 years ago as well. But there are several trends or aspects that are genuinely new to the current environment, and I have some illustration of that. For instance, the issue of innovation. So in the upper left corner, you see how the pace of adoption or adoption of new trends, new technologies, new innovations has really increased over several past decades. This is broadly focused on technology used by households in general. Next to it, this very hard to read figure that is taken from IOSCO FinTech report demonstrates something very similar, and that is how innovations are happening simultaneously in different sectors and how the complexity and number of innovations is growing over years. And if you go to that report, you will actually see the timeline on which it's very apparent how FinTech has grown in the past maybe 3 or 4 years. And very importantly, the long-believed assumption that innovation is only coming from the global north or developed countries, affecting what's happening in the so-called global south, also no longer really holds true, because we see in certain areas, specifically those affecting financial inclusion, such as mobile financial services, for instance, that a lot is happening in developing and emerging countries, and it actually has impact on what is then happening in developed markets that follow. And there are many other factors that are relatively new, such as the risk of digital divide that is increasing, for instance, the divergent forces that are sort of contradictory, such as the force pulling for more globalization, but then at the national level, forces calling for protectionism and nationalism. We also see something that I would call financial inclusion noise. The financial inclusion space has got quite crowded in recent years, and so it's become very hard to measure and assess which trends and which new emerging innovations are really contributing to financial inclusion and which ones are using financial inclusion rather as a marketing label. And so these are challenges that, in our view, are relatively new and did not really exist before. So in addition to dealing with all of these challenges, regulators should think not only how to cope with them, but also how to leverage opportunities that these challenges bring to expand and deepen the reach of financial services. And the question here is whether regulatory sandboxes can potentially help with that. So what is regulatory sandbox and what can regulatory sandbox do? At a very high level, regulatory sandbox is a space for testing of new ideas in life environment with regulatory permission that brings down the cost of innovation and generates insights into regulatory work so that regulators can learn about innovations before they decide on whether or not specific innovation deserves some more regulatory action or follow-up. However, and it's important to emphasize, it's only one among other regulatory tools that regulators can use when dealing with the challenges that I mentioned and innovation specifically. So here I try to put some comparison of several of these approaches. This table is by no means exhaustive list, so it's just an illustration, but it's an illustration of approaches that are either new and emerging, such as Sandbox or the FinTech license, or approaches that we've seen applied vis-a-vis innovations that are relevant for financial inclusion. And I used the several criteria here, all of which can be linked to the concept of regulatory sandboxes, so I'll go quickly through the list. The first one is the criterion of structure, which basically describes or indicates how well defined the approach is in terms of processes and methodologies. So what kind of written defined processes regulators have in place to deal with innovation. The second one, the issue of permanency. Permanency is to some extent illusionary because nothing is really permanent in human life, but regulatory sandboxes are being designed with the idea that they should become sort of a permanent part of the regulatory work and structure. So that's what the permanent refers to here. Objective-driven, that's another important criterion, which basically tells us whether or not the approach is driven by a certain specific defined set of objectives, which is again typical for a regulatory sandbox, and I will talk about it a little bit later. Open access, I would say it basically means whether the access to the framework that is defined needs to be negotiated individually on an ad hoc basis, or whether it's open to anybody who meets certain criteria defined upfront by the regulator. Then the issue of parameterized tests, that's the issue whether the approach allows for testing that is sort of contained and framed so that the results of tests can be measured and assessed against certain criteria defined before the testing starts. And finally, mutual learning, that tells us whether the approach allows for intense dialogue between the regulators and innovators so that each party can learn from the testing and the dialogue that's happening. And I will get back to some of these points later when I talk specifically about the sandboxes. Now, let me just go very quickly about each of those in the table. So I mentioned wait and see, which can be described as a deliberate decision not to intervene. It's particularly suitable for innovations that are at early stage, and regulator needs to learn more about what they are, how they work, what kind of risks they pose, and what regulatory intervention would be most suitable. And a typical example of that might be the history of peer-to-peer lending in China, which is captured on this timeline, and we also issued a brief where we talk about that specific history in more detail. Another example might be what many regulators have been doing vis-a-vis cryptocurrencies. So that's for wait and see. Then test and learn. It's arguably more structured and formalized than wait and see. And in some jurisdictions, it actually in many ways resembles regulatory sandbox, because under the test and learn approach, regulators also put in place some framework. It's a bespoke framework for live testing, often small-scale live testing, and they allow innovators to test some idea so that they can learn about how the innovation works and decide on regulatory action. So example here is what the Central Bank of the Philippines did in 2004 when they were testing e-money, non-bank e-money issuers. where they also allowed first some space for testing and so for natural growth, and then they decided 5 years later on e-money regulation. And since then, they've been applying this test and learn approach more regularly vis-a-vis different innovations ranging from individual payments agents to eKYC and other innovations. And obviously, as we know, this approach has been also adopted by other countries, famously known Kenya, but also Cambodia, Tanzania, Uganda, Rwanda, and many other countries have similar framework in place to test some of the innovations. The next approach that I mentioned has not really been adopted yet anywhere else, but there are several countries considering it, and I would call it FinTech license, which is basically an idea of having a specific license for FinTech activities, however they are defined in each jurisdiction. So just as an example, I use Switzerland, which is now in the process of adopting legislative change, which would allow for this FinTech license. And the idea is to allow non-bank institutions to take deposits and then manage deposits without having a banking license. But it's based on assumptions that they will not hit the 100 million Swiss franc threshold, and then there are other restrictions. Obviously, they would still need to be complying with KYC, AML rules, etc. So other countries that have been considering similar approach is the US with the OCC FinTech charter.
But just to clarify, so if they hit 100 million, they then would have to get a license to go beyond that. Is that?
Yes, so I've been trying to discuss that issue with my Swiss lawyer friends, and there's a lot of unclarity about how it actually will work in practice. But if they hit the threshold, what is clear is that they would be under obligation to apply for a license within a relatively short period of time, and arguably they should be able to get the license in a speed-up process. What happens if they do not get the license? There's a big question mark.
And it's not as if they can do whatever they want under the 100 million either.
Yes, so there are restrictions.
There are restrictions there. It's more that the full licensing is required after a certain size.
Yes, and it even complements another framework that they're trying to put in place, which is sort of testing based on notification regime, which are lower thresholds than 100 million, when they say if you are under, I don't know if it's 5 million Swiss francs or so, you can basically experiment with whatever, but you need to disclose to customers and meet other requirements. So in the rest of my presentation, I will focus specifically on regulatory sandboxes. So maybe let me start with a little bit more detailed definition of what regulatory sandboxes are. In our working paper, we basically work with the following definition. Regulatory sandboxes is a guidance issued by a financial sector regulator to allow small-scale live testing of innovations by innovators in a contained environment under the regulator's supervision. However, there are 2 points that I should emphasize at this point. The first one is that regulatory sandbox is just one name being used for this concept. So we see reg labs and catalysts and other names for the very same thing, because sandbox is obviously not always popular term to use for something as serious as, regulatory testing. And the second point is that the term is also used sometimes very generously by regulators and, different stakeholders. So we will say a range of implementation strategies that all can be labeled as a regulatory sandbox, and some of them may not fit neatly under this specific definition. So there is a variation of approaches. But for our working paper, we largely work with this because this definition fits the majority of sandboxes that we've seen. Another way to define regulatory sandboxes is through describing what they're meant to achieve. So we can say that it's a space created by a regulator to generate some sort of equilibrium for positive innovation, where incumbents feel encouraged to experiment with new ideas, and challengers feel encouraged to comply with the rules. So under ideal scenario, with this equilibrium, every stakeholder gets something out of that framework. So innovators, for example, can bring low the cost of innovation, and they can, for instance, attract funds from venture capitalists and others using regulatory sandbox as a framework. Incumbents may find it easier to experiment with new ideas because they will incur less compliance costs, and they can, I would say, fine-tune their risks that they need to manage because now they are in contained environment under the regulator's supervision. And obviously for regulator, the benefit is that regulator can learn sort of firsthand about innovations and try to understand the risks and challenges posed by the new innovations. So it's a big learning opportunity. So again, under the ideal scenario, bad innovations are stopped at early stage and good innovations are allowed and hopefully replicated by other players. So we can basically summarize in a way the benefits and risks here, concluding that some of the benefits of regulatory sandbox is bringing down the cost of innovation, opening access to regulator to a number of entities, and sort of improving communication between regulators and innovators, which is an important improvement. Formalizing a framework for safe live testing, which also improves signaling to the wide market and to investors who might be interested in supporting specific innovation. And as I mentioned, it's a learning opportunity for the regulators to learn about innovations at the early stage and use that information as an input for their market monitoring activities. When there are benefits, there are obviously very often also risks. And one of the key risks here has to do with competition issues.
Benefits. Moving on consumer protection, is it a way to get, innovators and startups to focus more on consumers?
Yeah, I think I will talk about this aspect when I get to financial inclusion because it's very linked to that issue. So in terms of risk, I mentioned the competition issue. There can be, and we've definitely seen that in our conversations with stakeholders, perception that companies that are in sandboxes get a specific treatment. And so there might be perception of uneven playing field or winners picking, which should be addressed ideally by the design of regulatory sandbox. A big potential risk that we see is limited capacity of regulators to run sandbox because it's disproportionately easier to launch a sandbox as compared to run sandbox on an ongoing basis. There are obviously issues that have to do with liability and reputational risk for regulators that are allowing, several companies to play with a new or experiment with the live customers. And one specific thing that I would like to mention is the coordination issue and the fragmentation of regulatory regimes nationally and internationally, because very often we see regulatory sandboxes being set up by one individual agencies in an ecosystem where there are multiple different agencies. And so unless there is a good coordination ensured, that might not necessarily work very well, especially in the world where financial services cannot be really easily categorized into the banking, insurance, capital markets buckets. So the coordination issue is an important one. I mentioned earlier that there is a range of implementation approaches, and so here I would like to emphasize that there is not really a single blueprint followed, but a lot of regulators follow more or less the blueprint by the Financial Conduct Authority, and so we see at least 6 common design components that many regulatory sandboxes share together. One is that they have defined objectives, why they're set up, and these objectives range from promoting innovation to promoting competition, consumer convenience, or financial inclusion. We also see that regulatory sandboxes obviously have very defined eligibility criteria, who is allowed to test in sandbox. Some are open to incumbents only, some are open to FinTech companies, some are open to whoever is interested to experiment with new ideas. There are safeguards and other restrictions that companies in sandbox need to follow even during the testing stage. Not surprisingly, AML/CFT rules, but also consumer protection rules and some others. An important design component is around timing for applications and tests. So in terms of applications, there are 2 main approaches. One is to have cohorts where firms are allowed to test in cohorts so that they can also learn from each other and arguably might be easier for regulators to handle. The other approach is to open Sandbox on basically 24/7 basis, so innovators apply and test as they feel ready. The other time dimension has to do with how long the testing should last, because there are limits, and these limits range from between 3 months to 24 months, even though some jurisdictions actually allow expansion beyond 24 months. Importantly, the question is how much it should cost to take part in the Sandbox. So should there be application fees? Should there be licensing fees associated with Sandbox? Who bears the cost of testing? And finally, important design component is what happens once the testing is accomplished. So the ideal scenario that is currently sought by many regulators to have the testing companies, the Sandbox firms, licensed and operating under one of those existing licenses, but many regulators explicitly told us that they are willing to consider their regulatory framework and changes in that framework if they see some innovation really deserves that, basically. So now let me just very briefly show you where Sandboxes live. So this map basically shows countries with regulatory sandbox that is already operational, means that some sort of testing has already happened. This map shows countries that are currently officially thinking about implementing regulatory sandbox and that they are at early or some stage of drafting the guidelines or implementing the guidelines. And here you have firms that have been already testing in Sandbox, majority of which actually belongs to the UK Sandbox, but you see also some other countries. The list is not complete because some Sandboxes do not necessarily disclose all the information about testing firms. Now, based on that picture, you may feel like a lot of FinTech is happening in developed or upper income emerging countries. So for that reason, I decided to include this slide, which shows what we found when we actually have been implementing the FinTech Challenge, CGAP FinTech Challenge in Africa, where we ask FinTech innovators to pitch to us ideas that where innovation can actually improve financial inclusion. And you see that a lot of things are happening in Africa as well. And quite interestingly, when I put those slides one behind the other, I realized that a concentration of FinTech firms in some of those countries corresponds to the countries that are currently thinking about regulatory sandbox, whatever that correlation means. So now let me move to the next slide where I try to compare the different approaches from a little bit different angle using the criteria of formality, structure, transparency, flexibility, cost, and regulatory intrusiveness or engagement rather. You know, we could argue probably for a long time about whether there should be 4, 3, or 5 stars under each category, but the point here is that the regulatory sandbox is a relatively formalized, structured approach that is open and transparent, and that allows a decent level of flexibility, but is also relatively heavy on engagement from the regulatory side and therefore heavy on resources. But a bigger picture or bigger point here is that there are different approaches, and these approaches are better suitable to different kind of circumstances. So regulators, when thinking about regulatory sandbox, should consider several issues, and I try to list some of them here on this slide. One of them being, what is the overall ecosystem and the market that they operate in? Is there a FinTech bubbling in their market? Is there a demand for something like regulatory sandbox? What is preventing innovators, either it be FinTech companies or incumbents, from actually introducing innovation to the market? Is it really the regulatory framework or is it something else? Obviously, the issue of legal and regulatory sciences framework has a big implications also on the capacity of regulators to set up something like this because it requires a big discretion for regulators to be able to carve out a regulatory sandbox and then to grant all these exceptions and waivers necessary for the live testing. And the capacity issue I already mentioned, and all of this should be obviously sort of linked up or joined up by policy priorities. So regulatory sandbox or not should be reflective of what are the real priorities of each regulator considering such an approach. So now, when we quite thoroughly explore the topic and talked about how it works and how it looks like, let me ask the question that CGAP always asks, which is, what does this all have to do with financial inclusion? And surprisingly, there is no easy answer to that question, partially because there is really not enough data to have a conclusive statement on that implications. And if you remember the maps, as you do, because that was not that long ago, that I show you with all these screens and threads and logos with the first letter in lowercase, which signifies FinTech. That was quite busy map, and this map shows countries that actually have financial inclusion specifically stated as an objective for setting up a regulatory sandbox. So there are not so many, but it's probably not surprising because the regulatory sandbox is usually set up within the mandate that regulator has, and there are not so many regulators that have specifically financial inclusion as their key mandate. However, it's an important fact to note, I think, that so far regulatory sandboxes has not really been designed explicitly to promote financial inclusion, although many regulators would tell us that when they were crafting the framework, financial inclusion and consumer convenience was on their mind. So this obviously puts us in a difficult situation to make any solid bulletproof judgments about financial inclusion and regulatory sandbox, but we can probably do a couple of safe assumptions or make a couple of safe assumptions. One is that regulatory sandbox may improve capacity of regulators to actually balance innovations with financial inclusion and other policy objectives because it's a learning opportunity. Another one is that promoting innovation may ultimately help financial inclusion, since in the past we saw many innovations that actually contributed to the financial inclusion efforts, either through developing new, more affordable, more suitable products, through exploring new distribution channels, through operational efficiencies that bring the cost of providing financial services down and thus making them more affordable, also through increased competition and experimentation with new business models. So innovation is good if it's good innovation, which is a little bit tautological, and regulatory sandboxes are meant to promote innovation. Therefore, some regulators can even deliberately decide to design regulatory sandbox so that it promotes financial inclusion specifically. For instance, by requiring segment targeting. So they can require the companies to, for example, focus on excluded segments during the testing stage or during the rollout stage, or even have the financial inclusion dimension part of the key performance indicators. They can even think about granting preferential regimes for financial inclusion providers, such as, for example, fees waivers or speed up licensing process and others. And so there can be deliberate decision to leverage Sandbox as a pro-financial inclusion tool. And as I mentioned earlier, where there are benefits, there are also risks. So we have some hypotheses about specific risks in this context, and one of them is that many countries we see that struggle with financial inclusion have already relatively stretched capacity to deliver on their regular policy objectives, and so stretching the capacity further with implementation of Sandbox may jeopardize implementation of those other policies. Another risk that we mentioned here is regulatory procrastination. So if you are in an environment where there are a set of basic issues that you're supposed to work as a regulator or policymaker, it might be handy to have regulatory sandbox as a fleshy, appealing kind of thing to play with, but the question is whether it fits really the overall priorities. I talked about inadequate institutional arrangements. Here it also means cooperation across departments within one institution, because we've learned that implementation of regulatory sandbox requires really quite well coordination within a single agency that set up the sandbox, and that's something that is very often a challenge for the stakeholders that we work with. And then one point that I would like to emphasize is the disproportionate distribution of benefits to already included segments. And that goes partially to cover your question about consumer benefits. So we see a lot companies experimenting with innovations that bringing benefits to customers, but a lot of testing solutions are focused on customers who are already banked, and the value proposition is around convenience and speed. I'm not saying that that's necessarily always the case, but there is a risk of fintechs being more focused on rather affluent and banked customers. So just to conclude, regulatory sandbox, as I said, is one of the several other options available to supervisors. It's not an exclusive point of entry for innovation, because innovation always finds different ways to happen, and so regulatory sandbox will probably never be the only point of entry. And then it's too early to evaluate the real impact because of the lack of hard data. So we're still left with the question whether regulatory sandboxes can help to harness innovation for financial inclusion and under what circumstances. But that's what we find exciting, because this is just the beginning of our work. The paper did just landscaping issue, and now we're digging more into the practicalities of implementation and the impact on financial inclusion.
Oh, thanks, Ivo.
Thank you.
So, I mean, I think there's not much more to say. I think Ivo and Kate have really helped frame the issue for CGAP and really frame for us what we think are the right questions. Can this contribute? I mean, it's interesting to look at the Africa data. Where FinTech is already happening also seems to be where so there's a little bit of a cause and effect question. Are the sandboxes following innovation in those cases, or are they really the precursor? And maybe it's probably more complex than that. But I think for us, one of the big next steps would be to see when and where could sandboxes actually be applied in countries, and how do they actually work, and do they in fact achieve the objectives that we've laid out for them. For CGAP, of course, that's always primarily about inclusion, but then it's also meeting the other key things for regulators around stability, protection, and integrity as well. But I think it's a really good time to transition to Catherine Wines, World Remit UK, because she plays in one of these things. Tell us it's perfect, it's great, it solves all your problems.
Nothing ever solves a problem. And just to say, it's not World Remit UK, it's World Remit Global. We are a global company.
Global, okay.
I thought it would be useful to say, I'll do a fairly short presentation, because I think questions and answers are always very good. But I think I want to show you, we are a FinTech company. We're 7 years old, and to explain maybe what we do to understand why maybe regulatory sandbox can be helpful for a company like ours, who work in a very heavily regulated industry. So I thought that and obviously with a link to financial inclusion, which is obviously very dear to our heart as a remittance company. So what I want to do is to present a bit what we do, because I think that will help to explain why we see sandbox being useful, and also our experience in Malaysia. So just to put it in context, what is World Remit? Well, World Remit is an international remittance business. So our customers are migrants sending money back home. That's really our core focus. And we started 7 years ago in London, 3 of us. We now know about 400 people around the world, and we send from about 50 countries to about 140 destinations. That means from those 50 countries, we've got to get licenses. We are a regulated business, and therefore we have to get a license to be able to operate in those same countries. And obviously, when we started 7 years ago, what we were disruptive, because we brought an industry which was very old-fashioned, where people had to go to shops to take cash and go to a shop to do a transaction. And what we brought it online. And by doing that, our aim was to obviously make it easier, much more convenient, and also cheaper for our customers. But you can imagine 7 years ago, being online, although a lot of things were online, when it comes to KYC, was still innovative. And in Europe, fortunately, that was a method which was acceptable. But as we progress, we know that that was a lot more challenging in a lot of other jurisdictions, and one of them was Malaysia, in fact. So that's something that has always been, is the regulation never follows, innovation, and we had to convince, and some regulators not too far from this country, in Canada, that that, online KYC is actually a lot stronger than sometimes, a face-to-face from someone who is probably not trained properly, convenience stores where you go and show your ID and probably doesn't recognize a fake ID to a real one, but whereas online you can actually straight away recognize a fake ID. So these challenges for that was to convince the regulator. So as I said, 50 countries, 240. And what we kind of did is as well looking at products, and as you can see, but I will talk a bit more about the range of products in a minute. I think for us, obviously, we're talking about financial inclusion and kind of fighting poverty. If we look at the remittance sector, it's a very big kind of sector. The amount sent every year is over $600 billion, and if we think that accounts 4 times more than the overseas aid offered by all the governments around the world, that's quite important to help people in the developing countries. And when we started and we're now, it's still a kind of relatively small amount of transactions done online. It's still traditional kind of operators. And what's interesting is to see also there the informal kind of sector. People still send money, give money to someone on the bus to go and take it. And why? Maybe because it's costly and it's a kind of and maybe they don't have all the KYC needed to be able to go online or to go to a shop. So the informal sector is still very big, and that's what is being also called. I think digitalization innovation can help there, and certainly the environment, the regulatory framework, Sandbox will, and I mentioned that in a second. So for us, we see very much that as changing. It's a drive now. We can see the speed of change. Everything goes online, and but the speed of change with people making it easier, and certainly the environment like the Sandbox certainly help towards that. Because at the end of the day, if we're looking from a compliance point of view, AML point of view, it's much better to be online than having a cash-to-cash transaction, because there you got an audit trail. Online, I can tell you a lot about an individual. If you go to a grocery shop to give you $100, I don't know anything. So what also, as I said, is important for us, and again, as an implication in terms of the Sandbox, is we saw very early on, back in 2012-13, the emergence of mobile money, and especially in the emerging economies, and in particular Africa. So today there's about 270 mobile money services around 100 countries, but with more being launched on that. And we obviously decided that that should be our focus, because if we're online, it makes sense to digitizing not just the send but the receive side, and that's why we've had a great focus on linking up with mobile money operators, especially in Africa, to make those transactions very easy and reduce the cost. And as a result, financially including a lot of people, because once you get a mobile money wallet, in a way, it's a bit like a bank account. You are the first step towards bankerization, and therefore that's really has been one of our mission, is to really develop that. But we struggle in some ways. We still have challenges, especially in Africa, where in some part of Africa, where the regulation is not quite ready for international remittance to mobile money. A lot of the mobile money have been set up for domestic system, but and generally a different department deals with international remittance. So we've had conflicts with regulators, sometimes between departments, because they see, the domestic side with the international as different, and in fact have stopped. So for example, in Cameroon, the regulator has stopped transfers to mobile money in Cameroon, which is obviously a very bad thing as far as we're concerned, because we're stopping people receiving money to their mobile, and therefore be able to take advantage of a service which is very vital for the economy, but also for them and for their day-to-day life. So that that's another there, and in terms of looking at Sandbox, and I think one of the problems when we look at Sandbox so far, is very much into the developed world, I would say, or the kind of developed economies. And I think there's a need to push, and I'm very pleased to hear that is looking at, obviously, at others and helping, other countries, especially in the emerging economy, to work with Sandboxes. So, so that, as I said, it's, for us, as I said, again, it's back to the kind of the point of what we're trying to do, and there's very much about financial inclusion and the importance of providing, the choice to customers, reducing and giving them access to financial services. And regulators, as I said, is often a kind of a challenge, because especially in some countries, there can be, some precedent of limiting, competition, or making, the KYC quite difficult, and therefore not giving access to people to there. And that's where I think innovation has been able to do that, to kind of be able to kind of bring solutions to these problems. But obviously, the handicap is often the regulator, because we cannot go through that. So if I talk about Malaysia specifically, Malaysia was one country we wanted to send for quite a long time. As I said, we're 7 years old, but a few years ago we tried and we couldn't, because the advice was saying, well, unlike some countries, Malaysia was not one, if you tick all the boxes, you get a license. You had to show that you were bringing something else. The problem is that something else could not be online KYC, because that was set in the law that it was only face-to-face KYC. So we couldn't kind of apply for a license, because we know we wouldn't get it, or we had to buy a business. But buying a business in money transfer is never quite, an easy thing to do, because you don't know what you're buying. So we didn't apply. We wanted to go in Malaysia, but it stopped us, to be able to provide a new service to a country, because the regulation was against it. So obviously we welcome the Sandbox, and we're able to apply for that, because it allowed us to be able to operate in a framework to be able to do transfers and do an online KYC. So the process took about when the application came through that we could apply, it took about 3 or 4 months to kind of apply and then go back and forth. And in fact, this is me doing a demonstration. So the regulators wanted to see how our product works. So I had to actually do myself a transaction and show them how good it was, and the results of actually doing a transaction and showing them what else you could do online. And that's really quite one of the things that can convince them, because they were actually never actually seen it, which probably a little bit, but they realized how strong it could be. The fact that I did 2 tests. I did one with just a basic card, like a staff employee card. Oh no, it was my travel card, I think. And they obviously, the travel card said, no, I don't recognize this, I don't like it. And then obviously I did it with my proper passport, and then they could see that straight away. I accepted it and did the checks to match my face to cover the photo, and therefore realized that the strength of that compared to maybe a face-to-face KYC. So that's what, one of the reasons they then allowed us, because it was innovative, it was bringing something new, and they could see that it could be then deployed later on. So that's what our experience. So our experience has been very positive so far. I must say it's been very much a cooperative, collaborative with the regulator. There's a lot of discussion. They even talk to us on WhatsApp, which is. I've been are you sure it's them? So, but they're very interested to to see how it works, and and asking us a lot of questions. And as a result of that, they've just just issued a draft regulation on eKYC and plan to have eKYC become law. So we're very proud that we helped that in that way. But the benefit of that for us is that we can go in a market which has more or less not a monopoly, but it's only 2 or 3 businesses, and therefore can provide a much convenient service to our customers, cheaper hopefully, which they didn't have before, and therefore that has a benefit for these people who are sending money back home. So that's that said, we're very excited. I think my conclusion is that I think we've really got to bring regulators in. They are the agents of change, and we've really got to work with them to help them and understand what what the benefits are and how things can work, so that they can actually have a great benefit to their people.
Look, quick, Catherine, just to, I'm asking people to hold on to your questions, and the people online keep sending them in. We're keeping track of them. But I just have just 2 sort of detailed. How long is the test period for you?
12 months.
12 months.
So they begin that. Yes. So they gave approval in the Sandbox for only 4 companies.
Yeah.
2 were foreign-based and 2 were local, and we were the only remittance sectors. Some were more like money exchange and insurance products.
And they've only just, I recall saying, they've only set up the Sandboxes very late last year.
Yeah,
so this is the first cohort.
Yes, September. So September they made it public. We got the the form to fill in, and then you've got 2 months to complete the form, and then you've got to.
And if you prove your case, though, I mean, is there you're able to negotiate potentially for a license?
No, we get the idea is that we get a license at the end of it.
Okay.
If everything goes well, and we get a license.
So was that explicit from them at the beginning?
Well, we asked.
Okay.
Because obviously, for us, it's a big investment. Even though that's control. We got to appoint 2 or 3 staff. We've got to. So obviously, we want to understand what happens next. And our understanding is that if we can, then we should be able to get the license. Yeah.
Thanks. I'm sure there'll be more questions as we come back around. Thanks for sharing that example. Very powerful. I'm going to turn it over now to Sean.
The single keyboard button.
Yeah.
Well, thank you both. Love the presentation, Diva. Okay, congratulations on a great paper. And I think you'll see when we talk about the Sierra Leone experience that we sort of cycle back to many of the risks and opportunities that you laid out. So hopefully it's kind of a coherent discussion. Before I dive into the Sierra Leone example, which is really sort of a process update, because we're in process developing the Sandbox now in country. We're actually in the public consultation phase of the external framework. It's a pretty exciting time. Wanted to just jump in quickly on two comments maybe you both made, because they do tie into the Sierra Leone experience. One is this notion that it's too early to tell how Sandboxes are performing and how they're impacting kind of a financial inclusion agenda. I think there's actually a point to be made there, which is if you focus on Sandboxes themselves and the activity that happens on the Sandboxes, that might be right. We haven't had people 3 cohorts yet and haven't completed the process. But there are interesting statistics about the activity that happens in the Sandbox and then the activity that happens kind of in the Sandbox penumbra, right? So I'll use the UK as an example. Yeah, something like 54 countries through the Sandbox there, something like 600 or 700 companies through Project Innovate. So there's this whole range of informal activity that happens around the Sandbox, with companies coming to the regulator and just simply querying whether they're well suited for the Sandbox. I think there's an interesting story there because it's changing the nature of the regulatory conversation with innovators. So I'm just going to encourage us to think about the impact of Sandboxes to also include sort of the Sandbox penumbra as it works. I think there's important stuff there. It's important for Sierra Leone because I think if we think about translating the Sandbox model to LDCs, Sandboxes actually play a pretty important role in ecosystem development, and that's how we're trying to position the Sierra Leone Sandbox as a tool to help that innovation ecosystem grow. It's obviously sort of what we'll talk about. It's designed as a sandbox. It looks like a sandbox, feels like a sandbox. But we're intentionally building in a great deal of outreach and stakeholder engagement around the sandbox to link in with other national initiatives to kind of have that conversation be more fluid and collaborative, to your point, Catherine. So with that little background, we'll kind of jump in. There are many folks in this room and on the call who have a deeper expertise in this part of the world than I do, but I always find this statistic sort of amazing that Sierra Leone, 87% of the population is excluded from the formal financial system, which I come from a U.S. policy and financial regulatory background, and that's sort of an astonishing number if you don't work in this space. And that number is even worse if you look purely at the agricultural parts of the economy, which of course is the majority of the country. So it's really a significant challenge in Sierra Leone. I just want to kind of frame that up front, so that they're running against a pretty big challenge. And again, it's against the background of a fragile state. So lots of challenges in Sierra Leone with financial inclusion. There have been a number of different high-level policy initiatives to run at this problem, starting with the Financial Sector Development Plan in 2008. Sierra Leone was a signatory to the Maya Declaration in 2012. They had some good success experimenting with mobile money in the Ebola crisis. And I think now we have, in 2017, a national strategy for financial inclusion, which I think is trying to bring financial inclusion forward in a more programmatic way. And our project kind of falls directly underneath that national level initiative. So just want to kind of frame that a bit. My slides look so unimpressive following Catherine's and Eva's, so apologies for that. But if we talk about the enabling framework in Sierra Leone, so I'm obviously helping with the Sandbox initiative itself. But I think there are important other, there are at least 3 other components that I've found helpful in reinforcing to our efforts in Sierra Leone. The first is just the financial inclusion mandate coming from the National Strategy for Financial Inclusion. That's provided a tremendous support for the political will within the bank, not just the governors, but down to the folks that are actually helping us design the sandbox. Being able to point to the inclusion strategy as a hook for those efforts has been invaluable in my perspective. We also have the great pleasure of working with a number of different technical partners who are not just advising from afar, but who some of whom are on the ground directly with the bank. So while I'm sort of a virtual or digital advisor from San Francisco, helping them think about the component parts of the sandbox, it's been a great benefit to us to have someone actually sitting right there with the bank and kind of going through and helping them think about different issues as they arise. And then finally, and we can debate aspects of this, but there's the Sierra Leone FinTech Challenge, was launched in June 2017, kind of a classic financial-based accelerator type of program where the top several companies were given a cash award. And then also the FinTech Challenge was directly linked to the then nascent sandbox. So if you were the winner of the FinTech Challenge, you had a cash award and you were automatically admitted to the sandbox whenever we eventually get it off the ground. But for someone coming into this just as a technical advisor on the sandbox itself, like these other component parts have been very helpful in situating the sandbox within a broader ecosystem initiative. And I would think, at least at this stage, this type of approach, envisioning the sandbox as a component part of the ecosystem will be essential in rolling out sandboxes across LPCs. I want to talk a little bit about the design process, and there's really 2 main phases of it. One is the design of the external framework. So that's the set of eligibility criteria and application criteria and so forth that companies will see as they apply to the bank. We can talk about that in a moment. The second piece is an internal piece where we're designing the operating procedures, the governance mechanisms, and then I think importantly some of the learning mechanisms for the bank to take lessons learned from the sandbox experience and bring them back into the regulatory process. But the external framework, just a few points here, Ivo, I think to highlight some of your comments earlier. We've tried to incorporate emerging best practices. So our eligibility criteria will look similar to other sandboxes out there. To Kabir's earlier point, we have a consumer benefit criteria genuine innovation, so it has to be kind of a novel or new product. So there's 6 or 7 formal eligibility criteria. You have a sort of safeguard requirements for companies participating in the sandbox, and then a supervision and reporting regime that will underlie the entire thing. The important piece to note is that the eligibility criteria are specifically linked to the inclusion strategy. So even though we've got 7 or 8 eligibility criteria, we have sort of a provision that allows the regulator a significant degree of discretion to prioritize companies that most advance financial inclusion in Sierra Leone. And that's, I think, makes the eligibility criteria somewhat unique, matches Malaysia in that respect. We've tried to be, and again, even to your point, tried to be responsive to regulatory capacity. And I should pause to say that with the Aspen Institute, with the support of the Amidyar Network, provided an early landscaping of Sandbox that came out earlier this year. And one comment I heard again and again speaking to regulators was this issue of capacity, where more often than not, folks running the Sandbox are doing it as their second or third jobs at the regulator. So because of tremendous burden on folks setting these things up, running them, supervising companies. So we've tried to build in a pressure valve, as it were, to allow the Bank of Sierra Leone to moderate cohort size based on capacity. So you might have companies that meet eligibility criteria and service the financial inclusion objective, but we're giving ourselves discretion to roll them over into the next cohort just based on capacity with no kind of prejudice to the way that the company is positioned within the marketplace.
Can you share what the size of the regulatory participation is? How many relative to how many firms will be coming through? How many regulators will actually be
participating in this? Yeah, it's still sort of, so talk about that point on the next slide on internal process. That's a great question. The Sandbox is open to incumbents and FinTechs, and actually to individuals. That was something the committee was very adamant about, to have if you have an individual with an idea that's sufficiently advanced, don't have a corporate entity around it, they can participate as well. So we'll see how that works.
So, Catherine, you can go.
Right.
Someone is leaving this room right
now. Off you go. And then finally, as I mentioned, this framework is currently in the public consultation process. We've had terrific engagement from the Sierra Leone FinTech Association. Has submitted some very thoughtful comments on the draft. Fantastic input from actually a bunch of folks in this room from the inclusion community and the development community, talking about how the Sandbox should be designed. Not exactly sure of the timing, but the framework should be released in the next 6 to 8 weeks. So this internal piece is also, we thought, something that was important too, because I mean, if you're looking around studying Sandboxes, you tend to look at that, the externally facing document, what's required, and to participate. We're focusing the second phase of the design process on internal operations, governance mechanisms, and learning mechanisms for the Sandbox. I'll focus on just, I guess there's 3 points to make here. First is that in the application period, which is essentially the go-to-market for the Sandbox, we're being very intentional about structuring the outreach process. So designating ambassadors to advocate for the Sandbox in the local FinTech communities, designating an ombudsperson to field inbound inquiries about the Sandbox, and using those inbound touch points as a learning mechanism, both for iterating the process real time and also just kind of getting a better sense of who's out there in the marketplace and interested in participating. During the Sandbox period itself, and Melissa, maybe this speaks to your point, the selection committee, which will review the inbound applications, will draw from regulators across the bank. So we're trying to have a fairly broad cross-section of folks participate in that process. Catherine and Eva, to both of your points, there's so much complexity within the regulator that we felt it was important to have everybody on the same page, participating directly in the selection process. Not sure exactly how big that committee is going to be. It's probably, but we will see. then finally, on the kind of the procedural review point, and this is obviously six or 8 months out, but we're trying to be intentional about building and learning mechanisms to the bank to do formal reviews of the sandbox process and feed those back into the regulatory cycle. We're designing this as a pilot program, so the sandbox itself will sort of last for a year, hopefully get 2 cohorts through, but then at the end of that time, almost like a sunsetting provision of legislation or regulation, we'll step back, review, and assess whether we've actually made an impact. And then here's just going to kind of open up the aperture a little bit and thinking about how sandboxes are evolving as a tool of policy. And Ivo, again, you've touched on a few of these things, and they've come up in our discussions with the bank. Imagining sandboxes, evolving to more thematic instruments of policy, right? So gap-based sandboxes focused on building up resources in particular sectors, either excluded populations or product gaps. Resource-based sandboxes, so you can imagine kind of converting the sandbox process and not admitting companies with any great idea necessarily, but inviting applications to work with public data sets and think about innovating off of a shared public resource. Event-based sandboxes, and this is, you can think of it almost like a pop-up sandbox, and this came up in the context of the mobile money experiments around the Ebola crisis. Temporary licensing regimes, which have features of sandboxes, right, heightened supervisory requirements, but relaxed regulatory requirements to bring products and services to episodic events. And again, to your point, this notion of a multi-regulator sandbox, I think that there's a particular opportunity there with respect to kind of bringing together bank-led and telco-led approaches to financial inclusion. Some other questions there, which really just kind of the broader point of how we translate the sandbox model from its developed economy roots to the broader applications among LPCs. I'll stop there and hand off.
Well, Sean, so you guys are on the ground. I mean, so just very quickly, how soon do you think the first cohort will go through? You said it'd be 1 year long, and you think it might be the first cohort might come how soon?
So that's great. So I think we're imagining the sandbox process to be 6 months,
okay,
up to 6 months.
So 2 cohorts of 6 months.
Yeah, okay. 2 cohorts of 6 months. The framework process is in consultation now. We'll wrap up, and ideally end of the year, the start of Q1.
Okay, wow. So I think it's a great example of someone actually getting it done on the ground in an environment that I imagine is quite different than with Bank Negara. Yeah, quite a different environment. So thanks for sharing. So over to Dia for a slightly different take on sandboxes. And so over to you, Dia.
Yep, thanks, Greg. So normally last speakers say I'm between you and drinks, but I know that I'm between you and questions, which is probably quite as equally as exciting given the presentation before me. But so I will talk about industry sandboxes, as Greg said, which are industry-led solutions where the regulator has a role. And this is an idea that we are invited to explore by the Financial Conduct Authority in the UK, where my organization is based, as part of their kind of holistic review of what efforts need to be made in order for the entire FinTech ecosystem to develop. And I think it's important to mention this kind of efforts because we've determined that there is a role for non-regulator-led initiatives in order to both improve regulatory efficiency in supervising FinTech, but also lift the entirety of the ecosystem and scale more propositions. So this is just a map of, or kind of a line of where industry sandboxes sit with respect to some traditional innovation support initiatives like accelerators or incubators, with respect to regulatory sandboxes, to which to Ivo's point, we've counted 23 in different stages of development and the live market. So the important thing to point out here is that industry sandboxes are off-market. So they're much closer to what technologists would think of a sandbox or a development environment. And they're not sponsored by the regulator, they're sponsored by industry. So we we spent a whole lot of time in a consultation process, and it's really kind of quite a privilege to talk to all the companies and the regulators and a lot of people in this room that help us pull together our thinking. And we came up with 3 different problems that the sandbox can do. So, Clayton touched at some point, what job does it do? But we think that it can do 3 jobs. So one, the basic point was solution development for innovative solutions. Typically, you think of this as a startup coming into the industry sandbox, but you can also think of it as a big institution trying to pilot something new. And this is important from a financial inclusion perspective because it can reduce, the idea of these sandboxes is to take new ideas to market faster. So it can improve the unit economics of developing the solution. So if you're trying to do high volume, low cost, this matters. The second one is complex problem solving. So in markets where you don't have the regulator installing digital identity or eKYC or maybe a holistic payments network, industry can use these sandboxes to come together and solve some of these problems through a governance process which is already out there for them. So again, from a financial inclusion perspective, this matters in areas where, as you say in your paper, infrastructure is light or non-existent and needs to be developed by a combination of different players in the market. And the last bit is that it can improve regulatory efficiency because it allows industry to do some of the regulator's job and improve the understanding or invite them to see solutions as they're being developed and create a mechanism through which the understanding that startups have on what the implications of their solutions are from a compliance perspective is clearer. To like Catherine's example, we shouldn't have a regulator who hasn't seen eKYC yet, right? I mean, it's great that you can do it in Malaysia, but it's not like issuing shares on a blockchain, right? It's kind of, you should have seen it already. So hopefully we can solve this kind of talent gap within regulatory agencies through an observer forum through these industry sandboxes. These are kind of the high-level design principles that we came up with. So from a governance perspective, they should be open in that different types of stakeholders should be able to come in and participate. They should be connected, and I want to pause on this one. So sandboxes do exist. Commercial organizations have sandboxes. Any technology on the market goes through one. The difference is that those are not interconnected. So if I'm a startup that plays with one bank, then I need to then go and start a process again with a different one. Or if I'm having access that MasterCard or a telco has volunteered for me to play with, then I can't play with different data sets at the same time. I have to engage with each one separately. And accessible, so this is to the point of how much should it cost. So the guidance very much from the FTA was, well, can we reduce the access to data sets, to APIs, technologies that startups already have? And we think we can. So we kind of came up with this two zones approach where the entry level is definitely free, and then there is a paid for area, but we need to determine at what cost. The participants of an industry sandbox could be users, contributors, sponsors, or observers. So to give you an example with a telco, right? If a telco is developing an innovative project, then that's a user of a sandbox. If it's donating data, then that's a contributor. If it's participating at a governance level for an industry sandbox, it's financing it and determining its course, then it's a sponsor. Observers are more entities that would see the output of a sandbox. So usually we put that in specifically for regulators, but you can also see it from a venture capital firm, for example, which uses it to do due diligence, or an academic institution. And then, so we had about 200 different representatives in that consultation process. They all came from different parts of FinTech. They disagreed on pretty much everything, except for the fact that the regulator needs to have some sort of role. So the idea is that the benefit of having an independent platform that brings all these capabilities together is that the regulator can engage with that independent platform perhaps more effectively, more readily than they would with each one of any one commercial organization. And the role of the regulator is to share knowledge with the sandbox participants, to observe the output, to ideally test the RegTech for their own purposes, and at the end of the day, inform policy much in the same way as Catherine was saying about their experience with Malaysia. This is kind of the wish list of design components that we came up with. So for those of you on the line, that's data through feeds or through APIs, permissions on accessing that data, reference architecture, certification, showcase space, advisory space, analytics and audit, participant forums, and application assessments. I'm not going to go through all of them, but I did want to stop at the concept of certification. Now, we talked about earlier about the concern that some regulators have, the regulatory sandboxes create a favoritism. And I think that's because these are being used for the wrong reason. So a startup should not be going to an institution saying, hey, buy me because I'm in the regulatory sandbox. It's not a due diligence process, right? So I'm kind of interested, Sean, in your idea of this challenge to sandbox example in Sierra Leone, because I do think that in other markets where we do have the benefit of a much more developed infrastructure, we actually wouldn't want to do that. So if we don't want startups to use the regulatory sandbox as a kite mark, then we as an industry should have a kite marking facility. And that's something that big tech companies are very, very well equipped to do. The problem is, the question here is, how do we lift that up at an accessible industry level? So that's been one of the sort of most interesting things that I've learned in that consultation process, and one of the ideas that I'm very keen to develop forward. Advisory space is another thing that I want to talk about, is that what we've learned from our members that have been in the regulatory sandbox in the UK is that one of the most useful things they do is that they have a regulator on speed dial, literally, and that they speak to on a weekly basis that tells them what's going to happen if they go to market in one way or another. If there is a clarity, I mean, there will be a whole set of rules where that question can only be answered by a regulator, but there's a lot of rules where that kind of question can be answered by a lawyer, which startups can't necessarily afford. So if the legal community can work out a commercial model where that advice is available, then it solves a little bit of the capacity problem the regulators have, right? If the rules are clear to interpret in the first place. And then, so I spent a little bit of time thinking of what the financial use case, the use case for financial inclusion is in an industry sandbox, and a lot of these views are informed by what our members tell us. But to my mind, there's a big play to make around access to data. So whether data is available to philanthropy or to other commercial model, this is a structure where if the structure exists, it will be easier for those giving the data to be comfortable that it will be properly managed, anonymized to the right degree, then any security and data privacy issues around it would have been thought by. So it's you would set up this playground with the idea that you would attract more players, so particularly on the data availability side. And this is important because this goes to having access to consumer insights and giving that and democratizing that access to companies that can build solutions based on it. You can talk about these kindergartens for AI, so that smaller companies can get access to sensitive data in order to build their algorithms. There are a whole lot of implications of something like this being available. Another aspect is that sometimes when there is thin air of information on what a financial inclusion problem is, so through complaints data, if you aggregate that data in one place, then suddenly the problem becomes much bigger than you thought if you're looking at it from a single company perspective. That might be about a problem, or it might be about a bias in the system that you can see by aggregating this kind of information. One of our companies that I really wanted to be here, but they couldn't, is a company called Uvamba, who are present in Sub-Saharan Africa, and they do lending based on alternative credit scoring model. And they have this idea about potentially, and I don't know if she's listening or listen to this later, but kind of had this idea about maybe even open sourcing this kind of information. Point being, if you're building an alternative credit scoring model, which is based on kind of tribal behaviors, that's a lot of hard work. And as a startup, there's only so much of that hard work that you can do before you go bankrupt. So if that kind of information is pulled through a structure which is already available, then potentially we move alternative credit scoring into mainstream credit scoring through a more holistic data set. So there's a lot of implications there. So that's kind of the data side. Then I talked about cross-border infrastructure and regulatory reform. Cross-border infrastructures are your ad hodars, your level 1 project, these kind of structures that are being developed at the moment. They would all have a sandbox environment. So it's not the sandbox that's necessarily the driver of the infrastructure, but to Sean's point, the sandbox could be the layer that creates, that makes the infrastructure into an ecosystem tool. So this is how you bring all the innovators to play with the layer of infrastructure that you've created in order for that infrastructure to be widely utilized. And the last bit of regulatory reform, it's not specific to financial inclusion. You can use it to any solution that would go through the sandbox, but the idea is that you can bring regulators to share knowledge on their supervisory approaches, improve the clarity and the predictability of an approach, ideally on a cross-border basis. And if we're really ambitious, again, why not enable multiple applications to multiple regulatory sandboxes at the same time? So that if there's several markets where KYC is not part of the main law, then ideally you can launch these applications at the same time, and they can learn from each other's experiences. So I'll stop here.
Fantastic, Dia. Thanks. Great example of how more structured sort of approaches can allow both regulators and businesses to learn in a more efficient way, as opposed to sort of maybe an adverse side of the test and learn is that it's really just one regulator talking with one business maybe, and not everybody gets to see and benefit from what really ought to be a much more open process.
Yeah, so I think one point of traction what we do have with the FDA on this is exactly that. So as Sean said, there have been over 700 participants in Project Innovate. That's literally companies calling the phone, right? And the regulator, as they would know, is not allowed to discuss one company's case with another company's case. So you're legally forbidden to do that. So if we as an industry can, and I hate to use the word, but curate that conversation, somebody gives me a better word, I'll stop using that one. If we can sort of facilitate that conversation, then we go a little bit towards improving capability on the regulatory side.
So may I add, just a point that I think is very important, because we know, like how long it takes generally for regulation to change or to amend, and I think the opportunity of that is to actually make better regulation, because you're actually making sure that it actually meets the need. Sometimes we've seen many regulations coming out, and then when they actually put into practice, that doesn't work, and then they've got to change it again. So I think that helps for better regulation.
And just to put this number of 700 inquiries into perspective, if you're wondering whether it's a lot or not, the bank Negara Malaysia, they received 600 inquiries of similar nature. So,
So I think given that there's a pretty big group in the room, we've got some very good questions online, but I'm going to hold those, that we'll come to those questions. Partly because it's hot in here and people probably want to say something, and maybe we go around the room and try and get everyone, we've heard a lot. There's been 4 very different, very interesting, I think in many ways, highly complementary perspectives. But maybe we can go around the room and people can just start asking questions, and we can direct them to everybody or to somebody specifically if you wish. Yeah, sorry, who's over there? Yeah.
Hi, my name is Paula Panier. I come from the reinsurance industry. I actually specialize in microinsurance products. So thank you so much for the very interesting and, as I said, very complimentary presentations. I was wondering if you have seen any application, as we talk about financial inclusion, in the insurance side.
Okay, good question. Why don't you guys ponder that one? We'll get one more question. Yeah, Paul?
Maybe 2 questions. One on absorptive capacity of regulators, and the question, and this has obviously been the case with Bank of Leone, the question of what a lightweight or frugal sandbox could look like, whether it's a matter of same breadth of scope or narrowly tailored to a particular issue. And then a related question is the topical idea that you proposed. So have there been innovation and financial inclusion, innovation, FinTech, very broad, but has there been discussion among regulators, between one specifically on KYC issues or AML, CFC, or has it still usually been that among many other bullets?
Good question too.
Yeah, no, I mean, I think along those lines, I mean, what if, people are also talking about FinTech bridges. Like, are FinTech bridges real? Are they effective? Like, Catherine, does participating in the Malaysia Sandbox give you access to other markets? Or, I mean, how are those working in practice? And then, can you envision Sandboxes working across countries? Is that really possible? Because people have been talking about that as well.
Okay, so we've got a bunch of questions on the table. Maybe take two more, and then I'd like them to react to that range. I think I've kept track of the questions, but so your name?
Yeah, thank you. So, do you know any particular examples around the world of proprietary sandboxes where regulators cooperate? So, I mean, financial, data privacy, this kind of problems that are together. Also, at the SEC meeting, advisory committee last week, I was attending, it was open to public, and one of the questions that was on the table was, what happens, and this is to be a problem, what happens with the ethics rules? So if there are regulatory sandboxes sponsored by the industry, does it clash with, because, I mean, can it just speak like with the procurement rules or ethics? Is it considered like if the regulator participates, is there any trouble on this? How do you overcome this? It's like you pull different industry, you participated as an industry group or different companies together. The partly is a problem.
Okay. You take one more before you guys. Yeah.
Hi, Jerry Grossman from BFA. And first a comment and then a question related to that. When we think about the environment for FinTech business, we tend to think more broadly than just regulatory sandboxes, and we see that as one piece of an overall enabling environment for FinTech. And in the near future, we'll be having a blog coming out that's exploring some of these issues, and it's something that we're interested in exploring in more detail. So thinking about things like overall fiscal policy with respect to startups, other incentives, digital connectivity, competition issues in the financial payments and telecommunications sector, and general doing business indicators, but tailored to the needs of the FinTech community. And I'm wondering, like Sean in particular, in the context of Sierra Leone, is the regulatory sandbox work being conducted in the broader context of looking at creating an enabling environment for FinTech?
So we've got a bunch of questions. We'll be able to go around for some more, but why don't we let you guys field as many of those as we can right now, and whoever wants to field them in whatever way, it's up to you guys. Turn it over to the...
So I'll start with the first one because it's a great opportunity for me to market our paper. Because there are several FinTech companies experimenting with new insurance idea and business models, and we listed several of them in the Annex 2. So I'm not going to talk about them specifically, but when you go to that list, you'll see that there are different experimentations with GPS tracking and sort of satellite monitoring, etc., where the implications for microinsurance or insurance generally might be.
That raises just a quick follow-on question: whether any of these sandboxes are across different regulators in a country, or are they all? Would that be with the insurance regulator in those countries?
Yeah, so that case is specifically FCA and then MAS in Singapore, but to that question, because that was one of the questions asked as well, the coordination issue across agencies is obviously very important, and we've seen that some agencies try to put in place some mechanisms to ensure that coordination either in form of MOU or in form of joint committees where they can take decisions and assess applications jointly so that there are no bad surprises for the other agency. The only case where I'm aware of two regulatory sandboxes within one country is Thailand, where there are two agencies having their two separate sandboxes, and Indonesia, arguably, but they're not yet in the implementation stage. And so Thailand specifically has a joint committee that is meant to ensure coordination between the two agencies.
If I can just follow up definitely on the insurance side specifically, so from an industry standpoint, I think the case is quite clear, right? I mean, there's no examples I can point to because we just came out of the consultation stage, but if you talk about sharing risk, sharing data in a controlled environment, so you can look at what the size of the risk is that you're about to insure and make sure that I think it's quite a strong case actually.
People have other questions they wanted to respond to. Paul's question, I think it was partly directed at you, Sean, and also Jerry.
Paul, you and I have talked about absorptive capacity before. I mean, I think I think actually that's what's motivating that the internal process part of the project is really trying to build in a learning capability for the bank and to institutionalize those processes and kind of support them. We've gone down to the very practical and designated administrative teams who aren't necessarily supervisor level folks, but just to support the process and document learnings with the assistance of kind of the technical team as well. But I think that's an exciting thing to think about in both the developing and the developed country context. And I mean, we can talk about examples just even here, how the CFPB has learned through Project Catalyst. I think there's interesting stories there. Your second question on sort of what's sort of the lightweight version of a sandbox, and that's a great question because you kind of press up against the need to have some sort of internal legitimacy and involve lots of relevant actors into the process. I think where a lot of the heavy lifting occurs is at that testing stage, that supervision stage. So you can strip that back in some way, and I guess that kind of bleeds more towards almost a maybe like the OJ cause actually in the payment space, kind of a licensing regime paired with some coaching. And maybe you get at that lightweight concept.
So when you say lightweight, you mean there could be processes or pieces of a sandbox that are really stripped down to the frugal sort of bare essentials that a lower capacity regulator might be able to more effectively implement when they're doing as a third part of their full-time job, right? As their third job on top of their other two.
Right. You have kind of a less onerous licensing regime with a 12-month onboarding process to full license, where you have a regulatory coach that helps you with that process.
I think Paul's other question was about purpose and objectives a little bit, and whether whether you guys, what you're seeing about sort of special purpose, solving a KYC problem. I mean, I know that it solved the KYC problem for you, but that wasn't the purpose of the sandbox in Malaysia. It was a broader. And what's your sense now? Should there be sort of ones that are sort of special purpose to solve a specific set of problems, or you think it should be a little bit more open? We can't predict where innovation is going to go entirely, right?
Maybe just to rephrase it,
okay.
Are you more likely to be successful if you more narrowly define?
Yeah. And are people getting from it what they expected is another way to say it, right?
Mm-hmm. I think that the issue, each regulator covers, we're talking about a number of products. If you see most regulators will country, it's from the banking to insurance to lending to, so there's such a big range, so that you can't really limit it. And innovation will come and say, oh, well, I want to solve that problem or solve that problem. So the limitation is a problem. What just to add to Conshan and stuff, the problem, especially in emerging economies of the sandbox. Is the regulators first have not sometimes been exposed to innovation. So it's very difficult for them to say, well, is that a good idea? And what should I do? So certainly support in terms of providing, and that point we said that is generally the third job that they've got to do as well. So I think if there's anything in common what bodies can do to help them, support them to be, understand what technology is about, and also support in terms of the work and make it lightweight rather than heavy. Yeah.
Right. These are the reactions to that.
Well, I just have one quick comment on Paul's question about the specific purpose, because it seems like there is now when we talk to regulators who are considering regulatory sandboxes, very often we see that interest is driven by a specific team or a specific challenge that they face, and that might be thematic, but that doesn't tell us much about how much it translates into success or better implementation, but it's clearly a pattern that I've seen throughout the conversations with some regulators.
So maybe just before we come to more questions, they were just still addressing, Jerry, sorry I've forgotten your name.
Yeah.
Yeah. You had a question a little bit about whether regulators are conflicted, possibly. Yeah?
Yeah.
I don't know if you guys want to tackle that one.
Specifically for our project on, if I understand you correctly, can it just be seen as sort of the regulator favoring a certain environment or even collusion by if there's an industry participation in it?
Yeah. I mean, not that strong as that, but maybe there is some uncomfortability that hinder this potential benefits.
I think a lot of that could be solved by a clear and transparent and open governance model. So if you if you have a clear set of criteria of who's participating in this environment, and those are seen to everyone, and that's auditable in terms of the track record that you're building with the Sandbox, then at least we haven't come up with a sort of a legal reason why having that kind of environment won't help. Yeah.
I mean, so in the UK, is the industry that sponsor this type of?
So what they've been talking about, the regular? Yes, it would be. Yeah. And as long as you can demonstrate that different segments of industry can come in and out of the governance structure, then it shouldn't reach the regulator's comfort level to participate as an observer.
No, I totally agree. I mean, Jeff Obama, that is the former chief of innovation from CFTC, proposed to the ACC last week to relax a little bit with ethics rules that partly hinder this type of So in the UK, it's possible. Thank you.
Okay.
Did someone have a reaction to Jerry's question? Or other reactions?
So there was one question about the cross-border sandbox, which I think is an important question to at least reflect on, because I don't have really answer to that question, but it seems to be very important, obviously, because FinTech and digital finance by definition is cross-border very often, and it's even more important in frameworks that are harmonized across borders. So European Union, for example, is a typical example of harmonized market, is considering regulatory sandbox because many individual member countries felt restricted by the European legislation in allowing some space for testing and innovation, because a lot of the rules are actually harmonized at the European level. There is a different approach that IFC is trying to test in cooperation with the Singaporean Monetary Authority, but that's not really, at least as we understand it now, it's not really about regulatory sandbox, but more about creating an ecosystem of fintechs that can sort of thrive in the Singaporean market, but reach out to other countries in the region and create a joint market. So.
Yeah, I would say something. So if there is no sort of passporting arrangement between, so you asked about fintech bridges, right? And I think the honest answer is we don't know. I mean, it would be great if these are the beginning of sort of a passporting arrangement, but no country that's issuing this has moved that far yet. So it's like a lot of photos and handshaking at the moment. If there's that arrangement, then it makes sense for what the ECB is looking to do, to have a shared experimentation space. But if it doesn't, and what Catherine was saying, what happens when you graduate the sandbox if the legal environment is not there?
But I think that, what I've found that, in the last couple of years is that, the regulators do speak to each other, and certainly, the FCA was one of the precursors of Sandbox, and certainly Singapore, I know, came to the UK to talk, and then therefore launched their own Sandbox, and then within APAC, there's been quite a lot of discussion, and I think that as a result, Malaysia launched the Sandbox. So there's obviously a lot of discussion, as you say. It's not something that you can actually, because the regulations are so different from country to country, to be able to say, okay, if you do that sandbox there, that's it.
Well, it's also a liability management point, right? So even if they sort of see, so I had this example in the Nordics last week, or sorry, I was there, and this company was saying that it took them 9 months to work out that they don't need to be regulated, and then 2 months after that decision, they're now expanding to a different Nordic country where we're starting the process again. And even though the regulators have sat around one table and talking to each other, they're not going to make a decision on somebody else's decision without going through the proper due diligence process.
Yeah, although you could argue, I mean, maybe the case in Malaysia, just to say in bridging, maybe eKYC would have happened anyway in Malaysia, right? And they would have seen it happening in a lot of other environments with or without necessarily a formal bridge, right? So, I mean, I think information and things flow so much faster today in terms of what's happening. And we'll come back. There's a specific question on the eKYC on Malaysia. But before we get there, there's at least 2 more questions in the room. And then I have some good questions that have come come online as well. Do you want to go ahead?
Tom Kimberg, consultant. I was a little bit, I don't quite understand about your risks. For the countries that I would worked in over the years, I would think that the primary risk is that the regulators would either be coerced or bribed to set up some sort of sandbox in particular cases, and that some bad or incompetent actors would gather deposits and default on them. Now, I think the arguments for the sandbox are great, but I do think that is the overwhelming risk in most of the countries in which I've worked, and there are a large number over the years. So I don't know how you were addressing it, or maybe you can't address it. Maybe you have to say, if you're working with regulators, you have to presume that they are honest, and you have to, and able, and so forth, and that they can't be defrauded, and that the parties that are operating the sandbox are all well capitalized, and so if they can't run off with the money, etc. However, for example, we have a major central bank, which is also the regulator, which, for example, just had $80 million stolen from it in Bangladesh, and then we have a supposed regulator in the Philippines, which was not able to keep this $80 million, or at least $60 million for disappearing. So that's this question. I don't, maybe given this exercise, this is all based on the assumption that everybody follows the rules and everybody is honest and competent.
I think, yes, that's always, just, I'm sure Charles got something to say about that with what he's doing in Sierra Leone, but don't forget the sandbox is a very restricted environment. Generally, there's conditions in terms of the size and the amount of transactions. So, for example, in Malaysia, the limit per transaction is limited to well below to what is normally allowed. We can't acquire so many much more customers, so they are reducing that risk by doing, by setting conditions, and I think that's where any sandbox should be done. So the risk of loss, there could be a loss, but a lot, is quite minimized. So I think that's the one point I would make.
Just David has a question. I would just comment very quickly. If those things are happening already, the question is whether a more formal, open process where you have to say what you're trying to do and publicly state your objectives and give criteria might be a step up from the worlds that you're talking about. But anyway, David has a follow-on question here.
Actually, two quick questions. David Medine, CGAP, and I was actually at CFTV Catalyst, working on Catalyst at early stages. First question is, what about the next Uber who wants to break the rules and the laws are against what you're doing? Does the sandbox have a role in dealing with a company where they're flat out against the law and their legislator has determined this is not appropriate behavior and they want to test that proposition? And second is, and I'm not sure you're talking about risk, but what about where the experiment fails and you have consumers who've actually invested money, opened accounts, taken out loans? Is there a wind down process where you don't injure consumers in the process of saying the test didn't work? It's fine to have a sandbox for testing, but not everyone passes the test. What do you do when the test fails?
So I think that comes to maybe handle the Uber question first. Maybe you guys handle that one. I have a related question that comes from online, related to David's second question. Maybe handle the disruptors break the rules, right? That's what they do, right? What about that, right?
Sandbox facilitate that, or is that they're not welcome to sandbox?
Well, sorry.
Yeah, please go ahead.
I would say, you can't break the rules without the regulators' agreement to break the rules, right? That's the definition of a sandbox. So if the regulators determine that what you're trying to do, and first of all, if you're a FinTech company who needs to be authorized, and the regulators determine that what you're doing should not be done, then don't do it, right? Because if you're not an Uber, you're going to get fined. But I think for a FinTech company, the point is that you need to, even if you're transferwise and if you want to go on a big public campaign down with banks, you are using corresponding banking as a background, right? So if there's something around there where you connect to the legal structure that you need to have a reduced or changed supervisory requirement to do, then that's what a sandbox is for, I would say.
Yeah, and I would, mention again the point that regulatory sandboxes are not, and probably will not be, the only sole point of entry for innovation. So there will be still disruptors and innovations coming out of garages in Nairobi or wherever, and scaling up before they sort of appear on regulators' radar screen, and then regulators will need to decide what to do about them, and that's perfectly fine, because Sandbox is not necessarily meant to contain every single possible innovation. The question whether Sandbox can actually facilitate Uber-like innovation that is really disruptive and in changing the way some industry operates, I believe that it is possible, and I believe that things like eKYC, for example, may be already disruptive quite enough that somebody else can build on that innovation to do something really big. But I don't feel like regulatory sandboxes at this point are meant and can be meant to sort of override the legal part of the legal and regulatory framework, because as mentioned earlier, there is only as much as regulators can do based on their discretion, and that discretion is defined by laws. And so if somebody, for instance, or if the law says that for customer due diligence I need to have a face-to-face identification with national ID issued, as in Malaysia, I can maybe use Sandbox to test that, but I will still need to change the legal and regulatory framework. And if there's not willingness to change the framework, then obviously that's a bigger issue. But I'm a big believer that Sandboxes can kind of help regulators to be more receptive to good innovation.
So in David's second question around what happens to failed products, because by definition we're going to have some failure, we should, right? I think there's a related question about, and I'm sort of coming, a lot of talk about entry into the innovation, but I'm going to talk a little bit about what happens later in the process and what happens after a sandbox period is completed. So one of the questions is, David, what happens when a product fails? Okay, so the second one comes from Denise online, which is, have we tracked companies that have successfully gone through, and what happens when they leave the sandbox? So it's, again, we're not going to have a lot of financial inclusion examples yet, but maybe from some of the other markets. I think that's a separate question. And then I think Denise asks yet another question, which is, has this helped solve the regulatory problem? And she specifically asks, in the case of Malaysia, this seemed to be more of a licensing question, but related to that, there has been an eKYC change. So, but I'm asking a more general question. Is the testing leading to some regulatory changes later on? So maybe it's a little bit of a later stage question across the board for you guys.
And you use that to define success.
Yeah, right.
Yeah.
I mean, what are we after?
Yeah. So what's going to happen down the road after these have been around for a while across the success of the companies, failed experiments, and regulatory reform?
Shall I start with the, I think in Malaysia, I think yes, there is probably they've probably been thinking of eKYC, but they have not introduced it yet. And I think the sandbox, as I said earlier, probably helped them to formalize their thought, because they are not experienced with that. And, in the region, it was not very common to do eKYC, and therefore that's really the sandbox is going to help them to formalize the pros and the cons, the pitfall, and therefore help with the regulation. And that's what they are doing. They are now issued a draft regulation, which is being, put out for consultation, and I think the sandbox is helping them to do that better. And I said, then the regulation, the upcoming regulation will be something which can be worked with. That sometimes it's been known for regulation not to work well once they.
Not to speculate too much, but a follow-on question might be whether they will rethink licensing remittance companies in Malaysia. I mean, partly because if there are only two incumbents and you're the third, if I understood correctly, that seems like an awfully small number. And shouldn't they?
That would mean probably their licensing there'd be more opportunity for people to come in the market than there was before. In terms of the failing, obviously, if we look at a company like us and some of the sandbox, most of them offer a service, so that just means that service will no longer be available. So, for example, if I was stopped, that means that people will have to go somewhere else to do their transaction rather than to them. So I guess it's they consider that in terms of sometimes accepting the type of business which are going to come into the sandbox.
Are you speaking specifically of unwinding products that you're tied up with customers when somehow the experiment is failed? I mean, has there been, what happens in those scenarios?
The UK, the way I understood it, and this is from speaking to members, has a rule. So I guess the question is fail how, right? Fail operationally or actually bring consumers worse off than when they started using your product. So the FCA rule, the way I understand it, is that if your consumers are less worse off by using your product, then you should, as part of the way your test is set up, you should demonstrate how you're going to bring them back to the position where they started before using your product. So that's the control that you need to provide in order to be part of the sandbox. And then on the exit point, again, what is available, which may be available to you, is a waiver, so the tools that are in the sandbox here, a waiver, a non-disclosure letter, or non-enforcement letter, etc., that may be available to you on an ongoing basis. So in a way, they're taking an approach that's available to big systemically significant institutions and extending that to startups upon exit, in the absence of the policy change that you need.
Yeah, I mean, so there's, I think different jurisdictions do it differently, but there's a few little pieces to your question, right? So which is, how do you wind down a company? How do you make consumers whole? And many sandbox frameworks have something around a consumer remediation or compensation mechanism. You have to attest to that as part of the threshold requirements for participating in the sandbox. There's also a disclosure piece that most jurisdictions provide. So I think Singapore does a good job of this, of just placing something on the company website saying, essentially buyer beware, you are participating in a sandbox company. So here you go.
Malaysia.
Right. And then there's the question of sort of regulatory relief on the back end. How do companies exit? And they can exit under a variety of different conditions, right? So just full market participant, restricted license, so forth. And I think that's been one of the issues in the United States with sandboxes is what kind of relief do you actually get for participating? Is it ongoing? Do you get ex-post relief for injury that happens in the sandbox and so forth? So lots of little questions out. But I don't think we have an example of any company exiting prematurely from a sandbox. I don't know.
Well, so what we don't have in the UK is we don't know, we don't have a full market view of what happened to all the companies that have exited the first few cohorts. I kind of have evidence on company by company basis, because that's kind of what is accessible. And it's not relevant because one of the companies pivoted and became something else. So they did fail, but they failed on their own business model, and they changed.
To be that they realized it was not commercially viable anyway. That's, sometimes that's what.
But did the regulatory reform follow with the information that they had?
It wasn't necessary. In this particular case.
But if a company fails and the regulator has enough information to say, this makes sense, based on what we know, even though the company fails because of bad business decisions, do they still follow with the reform, or do we have that information?
I think that's kind of the one KPI that most people who talk about this would talk about, is that right now we're measuring utilization, how many companies are going in, and maybe case by case basis what's happening. But
but what, just, I'm sure I'm right, but, sandbox is not about, the fact that you can't, it's also to give you access much more quickly to the market than there. So sometimes the regulation, a license could take you 2 years, I'm still waiting for New York after 2 years. It takes a long time to get the regulator, to get a license in a lot of instances. So that sometimes is to help that new innovation to come in the market. So the license already exists, but that means it will probably take 2 years to get the license in order to operate. And the regulatory sandbox allows them, therefore, to act much more quickly to see if it works as well, and therefore bring a benefit to the consumers.
In the paper, we to the question of the regulatory challenge, whether it's resolved through the sandbox. So in the paper, we refer to another research that sort of suggests that regulatory sandboxes may be used as a signaling mechanism if there are applications coming and concerning one particular area that has to do with eKYC or another regulatory requirements, it's a signaling for the regulator to actually think about the framework and maybe change it based on the experience from the sandbox. So it may potentially indirectly contribute to solving that regulatory challenge.
So one more question online directed to Sean, which is about Sierra Leone and about what the evaluation was of some of the cost benefits of that choice. There's the opportunity cost of people's time coming over from their other two jobs. But then, as Ivo had structured, there was sort of, there is a range of options that you have. There's Sandbox. We've now heard, I think Paul is coined the frugal Sandbox, or Sandbox Light, or I think we've got a couple variations on the model. But then Ivo had laid out test and learn and wait and see, and also this the FinTech license. And just how have you and your partners evaluated some of those choices so far?
So I'm going to give a totally unsatisfactory answer, which is that those decisions were made before I came in. So I don't know how the sausage was made necessarily. Okay. But we are being attentive in the design process to be as efficient as possible in these regulatory resources while still being attentive to the fact that it needs to be broad involvement and engagement for it to be viable.
Sure. Makes sense. Were there some last questions in the few minutes that we have left from around the table for,
I wanted to come back to the idea of industry actors working together, whether it's sharing data, tackling a particular issue together. Some of what you were suggesting sounded almost like opportunity for building a commercial type of utility. And would you see that kind of outcome as being a useful outcome if it's ultimately helping to solve, not necessarily making regulatory change, but facilitating a means for industry to more collectively, or the alternative data utility, it sounds like functionally is what may be coming out of that. Does that suffice in terms of success in some ways? And to the extent that you're seeing that happen, are you all trying to facilitate that kind of function within industry?
So from our perspective, openness and access would probably be the questions to the commercial proposition. But you're right at that. When you're trying to bring commercial players to the table and you're asking them to give things for free, they are asking you why, right? So which is why kind of having a continuum of easy access to some services and then maybe pay for access to others seems to have more traction, at least on the market I'm working on. So if there is openness, easy access, interoperability, these design principles that we set out, then these objectives that we look for the industry work would be achieved. Yeah.
Maybe just a comment / question. I came into this thinking that a weakness of the regulatory sandbox as a label and a concept, one weakness is that it can become the vehicle for any number of objectives that we've talked about, some of which are sort of at odds and come from different stakeholders. But I wonder if that in some ways can also be a virtue because already we've heard a couple different examples of things that it seems like they might have been more difficult to achieve if you face the issue head on. eKYC in Malaysia maybe being one example that, for all we know, may have been a non-starter if you approached them as a foreign firm and said, hey, we have this great solution, and they might have said, no, actually, we're worried about that. So I wonder if that actually, and also if you're in a smaller market, maybe you need some sort of catch-all signal that says, hey, innovation.
Yeah, it does. I mean, we're reaching the end of time, but it does raise, I think, a very important question. These could take lots of different shapes, and I think there are steps. I was speaking with a regulator a few weeks ago, and she said, what is this fascination with sandboxes? We've had sandboxes for years. We just never call it that. We've been doing other things. We've been trying to adapt to regulations all along. It's not been as formalized as a structure, but we've been trying to respond to innovation for a long time. I think from what I take from all of this is that there's quite a bit of work happening. One hears in developed markets, clearly this is moving very fast. I mean, pioneered here and in the UK, and of course some of the more developed markets are money centers. I think the question we have going in is some of these lower capacity, but Sierra Leone, it's a great test case, but EVO is looking at other countries where we might go in with some partners to perhaps test some of these ideas and see if they actually hold in some of the markets that we're working in. But then I think we have to really be careful about evaluating them against all the different options, thinking about, Paul's sandbox light or the frugal sandbox and what kind of an approach might work there, and really trying to solve. Ultimately, it's about, and I heard this across all of them, it's really about regulators and businesses figuring out a better way to have a conversation. And if that's not already happening, maybe a sandbox is a way to begin the conversation. But in other markets, that conversation may be well underway, and then you've got to think about a sandbox for a different purpose. It's a way of structuring some of the conversations around some specific innovations. Anyway, I just want to thank the 4 panelists, each with deep contributions to the conversation, and I certainly learned a lot. So thanks a lot. One last comment is that the webinar recording will be emailed to all attendees who are online as well as those who are here. So it can be replayed, and so we can't get our words back, right? I mean, it's over.
Chatham House rules, right?
Chatham House rules is out the window. Sorry, I should have said that up front. Thanks a lot.
Thank you.
Thank you.